Alright, guys, so I found this article a while back and I was just trying to go through it in my own time. And, you know, it's just talking about the important roles of market maker in the financial market, right? And of course, they're providing liquidity and all that stuff. Try to say that they are the liquidity provider, which, Doug Sifu always said on the interview and stuff like that, in order to maintain the market robustness and blah blah blah, right? And the SEC defined them as the firm that stand ready to buy or sell a stock at a public quoted price, quote unquote, public quoted price, meaning, the price that you see on the screen when you go trade a certain security, right? Now, they have the ability to trade in both registered exchange or alternate exchange, okay, or alternate trading system known as dark pool, right? Guess which one they use more. But anyway, so I'm not gonna go through all of that. Just gonna point out a little bit here, of course, right here. It's just going through the significance of using algorithm to try to take care of all of the orders coming in, trillions of dollars a day and whatnot, right? And then it just go through all of the important roles and toolbox that they have to try to mitigate risk and all that stuff to maintain the firm from going bankruptcy and whatnot, right? But here's the one that I caught my eye right here. So in this excerpt right here, or this graph right here, it shows the percentage of execution in market orders in a meme stock, okay, on the lit exchange. Now, there's a lot of other lit exchange out there, but Nasdaq, I think it's the one of the largest, right? Don't quote me on this, but everybody recognize who Nasdaq is, right? All right, so in this one, as it says here, we note that in one meme stock market order, which are almost exclusively used by retail accounts, often spiked, suggesting that periods where wholesaler stepped away and sent order onto the exchange. I think they meant like lit exchange, meaning that the wholesaler didn't grab onto it. Now, wholesaler is a market maker or payment for order flow, right? Oftentimes when you place order on those apps like Robinhood, Weibo, and whatnot, it get bunched together, and the order book is not sending straight to the lit exchange. It's been intercepted by the market maker, the largest one. I'm not gonna name any, but they do that in order to see your order and then either front run you or just bunch your order based on lots amount, right? Because you only order one share, they want to wait for another 100 shares at the same order, or at least average it out. But that's not a free market, is it? Doesn't sound like it, right? I mean, if you have everybody's order, any idiot would be able to make money off of that. It's like, and then you just arbitrary giving out the price number. Oh, okay, I'll fill you at this price. Like, really? So I don't think that's how the US market should function, but I digress. But look at this right here. So I wanted to show you something. Now, I know they didn't say it's GME, blah, 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 right? I get it, but I mean, come on. So it's in during this time period. Let me show you what I have here. Boom. Now, it's a little bit distorted, but I have my reason for doing that. So bear with me here. So in here, I went ahead and of course, this is GME, right? Let me write that on here real quick. Yeah, GME chart. Okay, this is from the time period in which that chart was made, right there. And I went ahead and kind of lined that up to that price, and just to see if there's a corresponding spike in which we could see here. You see there? Okay, so this is January 28. Remember that one? I bet you do. Okay, and then what is this? This is the spike. This spike right here, it didn't do much there, but right here only accounts for this much. But this spike right here seems to correlate to this one. Okay, so it's a bit puzzling there. Any other corresponding spike? Right there. And mind you, look at this percentage. It's ridiculous. 1%, and you're able to see that spike right there. Right? Now again, I know it says meme stock and it did not mention which one. But come on. Like, look at this. Spike. You can't tell me otherwise here. That this doesn't mean thing. Look at this. Perfect. Right? And this is a little bit down, but again, spike nonetheless. Okay. Now this one is a little off, but you could see like 1, 2, right? I mean, a little bit, sorry. It's a little bit off, so I'll just undo that. So, I mean, again, because of distortion, it might a little bit off, but you see what I mean. You could see what I'm trying to show you here, And this spike, I'm sure, right there, caused this type of volatility, right? I mean, on the graph, it's like around here somewhere, but since this is a spike, that's why I marked it there, right? So yeah, I mean, like, it's really undeniably that this is what they're talking about. And again, like, come on, look at the volume that was able to go into the lit market. 3%. Imagine if it was 100%. The price of GME would have been God know how high. Now, you're telling me this is a free and fair market? Healthy? For the economy? I don't know. It's just mind-boggling to me that people still think that this is good for the market. And of course, people who stand to benefit the most is the people up top, right? And this is before any of this narrative that comes out recently about naked shorting on other stock that is somehow much worse than GME. Right? And man, like, look, I know the article didn't say which one in particular, but here you go. I mean, the correlation is there. So that's just what I observed here in this article, and again, I'll post the link to this article so you could enjoy reading the rest of it. Now, I might use this diagram here for my next video here, but yeah, this video is too long already, so I want to end it here. Okay, thank you for watching. Bye.